We're pleased to welcome Greg Ebel, the CEO of Spectra, for an interview that you'll see only on Bloomberg. And Greg, just want to mention that Adam Johnson, our resident oil expert, is here with us as well. Greg, start off by talking to us about how higher commodity prices helped bolster your second quarter numbers. We know that crude on average was 30% higher than a year ago.
Well, that was the real driver, no doubt. A couple things happened this quarter, and anytime you can deliver to investors, 20% year-on-year growth, you feel pretty good about things, and particularly where we are for the year to date. Indeed, commodity prices improved our business at the processing side, where we deliver and process natural gas liquids. Those were much higher than they were a year ago, so that helped. The Canadian currency helped as well. And then on top of that, our fee-based business with added expansion projects last year all added to our earnings growth for the year.
Hey, Greg, it's Adam. Question for you. The best year was in 19. How about 2008? You made $1.83. The forecast for this year, what about $1.52? Next year, $1.72. In other words, we're still not back to that peak. When do we get there?
Well, I think what you're going to see is us continue to see the 8 to 10% EPS growth for our company. So we provide one-year guidance, and you're right. We said this year we'd earn about $1.42. The street's at around $1.50. We're well ahead of where we thought we would be at this point in time in the year. I think what happens with commodity prices is really determinant on what happens with the economy. I think the fear of a double dip is starting to subside. It's still there, but you've seen some good results in the last couple of days as the auto sales up about 5%. That's good for our processing business in that some of those byproducts, natural gas liquids, are used in plastics. Plastics, obviously, a important component in the auto business.
Greg, I want to talk to you about the potential of the shale market in Western Canada. When I speak with analysts about Spectra, that's the area that they're excited about. What additional movement do you see there? How are things progressing on that front?
Well, it really is. It's just an extension of the shale play activity that you see across North America, which is really providing the continent with a great source of clean natural gas to fuel both the economy, help us on the energy security side, and obviously environment. We, just in the last quarter, signed up another project in Western Canada, a Dawson Creek project, which will add another couple of hundred a day of processing capacity in Western Canada. And that brings a total of about $1.5 billion worth of expansion capital we expect to put into Western Canada. So that's probably our fastest growing part of the business right now, and we're very excited about that.
You've also made a move into storage. Lots of people say that there's some concern about overbuild on storage in the near term. Talk us through about whether this is going to be a difficult market in the near term before it starts to pay off over the long term.
Well, storage has been an important part of our business. We're one of the largest storage operators in the country right now, and we did make an acquisition announced in July to buy a storage project that is being built that'll add about another 50 BCF of storage. To put that in context, though, there's about 4.5, 5 TCF or 4.5 or 5,000 BCF of storage, and Spectra Energy itself would make up about 300 BCF of that. So still, there has been a build-out, but it's relatively modest. I'd say about 10%, but it's absolutely critical to power producers, which are increasingly more gas-fired generation, critical as LNG to some degree comes into the country, and obviously critical just given the amount of new supplies that we find across North America. And we think as we build out that storage over the next 5 years, we're going to see some real value opportunities.
Greg, I got to jump in because one of the other things it's critical to is allowing you to be opportunistic. In other words, if nat gas gets real cheap and you've got storage, you can go out and buy it as a trader rather than just as a distribution guy, put it in storage and ride that up. Is that part of the plan at all, to start trading this thing a little more aggressively?
Well, that's not what we do, but that's definitely what our customers do. So we sell not only to LDCs, as you point out, but also marketers and traders. So they take advantage of the differentials between the summer and the winter, obviously in the price of natural gas, and then just regular volatility that may be between geographic areas and things like hurricanes. So indeed, and in the Gulf Coast region, where still 45% of natural gas supply today, and I would suggest in the next 10 years will be there, that's going to produce real opportunity.
Thank you. We've been speaking with Greg Ebel, the CEO of Spectra Energy.